There's an employer-sponsored account that can help you build wealth that you may qualify for, but probably aren't taking advantage of. No, I don't mean your 401k. I mean an HSA, a health savings account. You could be building stacks of tax advantage cash right now. Money that you can grow with the markets to help pay for medical expenses down the line. And here to tell you all about it, we've got Jennifer Streaks, Business Insider, Senior Personal Finance Reporter and Spokesperson. Jennifer, great to see you here. So a lot of people are missing out on this right now. How can they make sure that they are getting into the right and taking advantage of this HSA?
Well, thanks for having me. But yeah, the HSA is a common health plan that most people do not know about. It's through your employer. You just sign up with it the same way you would with your 401k, and you start immediately taking advantage of the tax benefits.
Okay, and so what can you use those HSA dollars for typically?
You should think about it as a bank account for your health, for your medical expenses. It's for qualified medical expenses, things that aren't going to be covered by your regular health insurance plan. And there's a long list. You check to see what your plan will cover, and you can reimburse yourself if you have to come out of pocket for those expenses.
So when should people start investing in an HSA account and making sure that there are funds that are going in there?
As soon as you can. I have one, and I love it. I get to reimburse myself, or if I don't want to reimburse myself, my contributions actually reduce my taxable income. So it's beneficial to me even if I'm not actively using it.
And you mentioned the tax benefit there. What are the typical tax benefits of HSA accounts?
They reduce your taxable income. Your growth, any of the interest that comes out of that account is also tax-free, and your withdrawals are tax-free as long as you use them for qualified medical expenses. So it's a triple tax benefit.
And then the eligibility here, I mean, how do people go about assessing their eligibility to contribute to an HSA?
Well, you have to have a high deductible health plan. So you need to check with your employer, see what your deduction is, look at your plan, the health plan, your number one plan first, and see what your deductible is. And that'll tell you whether or not you're eligible for HSA.
Just lastly, while we have you here, I mean, the dollars that people are putting away, it gets cut into a little bit more as the expenses or the cost of certain services go higher within the healthcare industry as well. How can people adequately assess the amount that they're putting into that spending account?
I think that it depends on what your health needs are going to be over the course of the year. We all know what our well checkups are going to be, what your dental expenses are going to be. And if you need to increase your contributions into that, so you basically make a budget for your health care and you decide based on that what you're going to need to contribute.
Jennifer Streaks, Business Insider, Senior Personal Finance Reporter and Spokesperson. Jennifer, great to see you. Thanks for taking the time.
Thank you.